I'll preface this video by saying that nothing I'm sharing here is investment advice, but I would like to explain my thought process and what I'm doing to build a portfolio that works for me. And it has been working for me, and I enjoy growing it. It's kind of a hobby of mine, and I wanted to share my opinions. But I first wanted to say that my core investment thesis, my core investment strategy, revolves around Bitcoin. Bitcoin is the apex asset. Bitcoin is the hurdle rate. Bitcoin is the future of money. I'm 100% convinced of that. I've done my research, delved down the rabbit holes, and I know that every asset on the planet is going to be repriced in Bitcoin, not in US dollars or any other government currency. How long will that take? I do not know. Right now, it's viewed as a capital instrument that could last 5 years, 10 years, 20 years. Who knows? We look like we're going into a period of American expansionism, which may prolong the strength of the dollar as the dominant government currency going forward for a period of time. Regardless, Bitcoin is a fixed supply. It is the most risk off asset on the planet, and it has the best properties of money of any asset on the planet, including gold. It is magnitudes better than gold. So Bitcoin is the core of my investment strategy. Now, if you hoard a lot of something, it's a growth asset. We'll say that Bitcoin is viewed or acts like a growth asset right now. If you do that, that might be great, and you might 10x your value of your portfolio or your wealth, or 100x or 1000x or whatever over a long period of time, and that's great. But you need to live your life as well. So your and we also know that Bitcoin can be very volatile. So your time preference does matter. Somebody who's 21 years old and holds a Bitcoin could potentially hold that Bitcoin for the next 20 years and never sell it. Somebody who's 40 years old might want to hold some Bitcoin, but their time horizon is going to be different. There are things they want to do with their life. People with children are going to have different time frames, different time preferences than somebody who doesn't have children. So these strategies or these assets that we look at are tailored to our specific needs. Again, I will say, for anybody, me personally, what I did, I believe that everybody should accumulate a healthy portion of Bitcoin before they do anything else. I think they should secure some, and I think they should take custody of their Bitcoin. Don't leave it on an exchange. And I think now there's multiple layers of security that you can use when you take custody. The simplest being just a simple hardware device or even a hot wallet on your phone. I would not leave a lot of Bitcoin on your phone. I got a little bit on my phone, on a phone wallet, hot wallet. But there's other things. There's the Jade, the Ledger, Trezor, Cold Card. I've played around with a lot of those wallets. Those are simple wallets. I think the most secure thing you could do if you were to accumulate like a lot of Bitcoin and not touch it for years, the most secure thing that you could do would be a multi-signature wallet with your seed phrases in multiple geographic locations. I think that's the safest thing to do for people who want to accumulate a lot of Bitcoin. Aside from that, I think the average person wants a brokerage portfolio, one that pays them, one that they can uh, enjoy growth from, and so that is what I want to touch on more here, not just Bitcoin in self custody. So, first of all, when it comes to I'm building an income based portfolio. If I want a growth asset, I can just buy a little Bitcoin and let it sit And as long as my time preference is long enough, I know that my Bitcoin that I purchased today in 5, 7, 10 years, I have a nest egg with which to do something with. It'll be of greater value. Now, I could also make a Bitcoin purchase today and have it drop 20%. I mean, so I think it's a very poor idea for somebody to use Bitcoin for short term savings. A lot of people act like that's a good idea. I think it's a horrible idea. If you want to go take a $5,000 vacation 9 months from now and you take 5,000 units of government currency, dump it into Bitcoin, well, 9 months from now, that $5,000 might have the same purchasing power. It might fall to $3,000. Long term, it's a smart move. Short term, it's dumb or risky. And that's really the only risk to Bitcoin that I've ever found. I've jumped down the quantum rabbit hole, many different rabbit holes, and the only risk is short-term volatility risk, and that's it. That's really it. Long term, I have not found any risk that concerns me whatsoever. So that being said, and having said that, my investment thesis is, or my portfolio strategy is income based. I do have an allocation, two allocations that are not income products. One of which is IBIT. IBIT is an ETF for Bitcoin. Now, again, that may sound like a contradiction. A lot of hardcore Bitcoin maximalists will disagree with holding IBIT. It's technically not your Bitcoin. Yes, legally it's your Bitcoin. BlackRock, I believe that's a BlackRock product. They are holding Bitcoin in self-custody, and you are entitled to it. If the government were to seize it or whatever, it's not your Bitcoin, whatever. But institutionally speaking, IBIT is a good choice. And the reason some people, I don't do this, some people might like IBIT for a number of reasons. For me, I like it for easier accounting and tax purposes. So when I want to sell some Bitcoin, I don't see a reason why I should go into a hardware wallet and sell physical Bitcoin. If I buy shares of IBIT, it's easier accounting for tax purposes. And that's why I hold some IBIT in my portfolio. Other people might do this. They might use it for margin purposes. I don't use margin. I might make a separate video as to why margin investing is a bad idea, in my opinion. But if you were a margin investor and your IBIT, the value of your IBIT increased over time over the next 5 or 10 years, well, you're going to have access to greater margin in your portfolio. Whereas if you were to use Bitcoin, I don't believe there are many brokerages that are going to give you additional margin for your Bitcoin if you actually have Bitcoin on their exchange or on their website. However, you will have access to greater margin if you hold IBIT. Again, I think margin's a terrible idea. And the reason I think that margin is a terrible idea is because it changes people's investment psychology. And that's the big thing. Mathematically, especially if you're an income investor like I am, mathematically, if you use credit cards and margin, things like that, mathematically, it makes sense. But what I've experienced is that if you're constantly worrying about margin calls and you're constantly worried about potential mistakes you've made with your strategy, that margin is going to completely change how you invest. And the psychology is very, very important. Not only that, but you're also paying, the margin fee, which arguably isn't much, but you're still paying a margin fee and you're changing your psychology. Mathematically, does it make sense? Most people who are either incredibly self-disciplined, which I don't think there are many when it comes to something like this. If you're incredibly self-disciplined, you know how to use margin, then, that's your business. But I think most of us, if we're humble with ourselves, should not change our investment psychology in order to make quick income. I think it's a horrible idea. But you could do that. So that is a core. It's a savings mechanism that I could tap into if I needed. And it's easy for accounting and tax purposes. I wanted to talk about another investment. Now, when it comes to my income investments, I have 6 core positions right now. I don't think I'm going to list all of them in this video, but there's 6 core positions. One of them that I just recently added to, and I probably should have added to it earlier on. Not that it's existed for very long, I don't believe, is a fund called XLEI. Now, XLEI is energy exposure. It's exposure to the energy sector, and so you have exposure to companies like Chevron, Exxon, Shell, Devon. Now, I really like ExxonMobil for a number of reasons. I like ExxonMobil, and I want exposure to it with growth potential, but I also want that income feed. Now, if you hold ExxonMobil stock, you will get paid a quarterly dividend, and you will catch growth. However, the dividend income that you will receive from ExxonMobil, I think, is pointless when you factor in the fact that you can just purchase something like Bitcoin or IBIT that's going to give you much more growth. The quarterly dividend that you will receive from ExxonMobil doesn't make up for the growth that you're going to get from the stock when you could simply hold Bitcoin for 5 years or 10 years or 20 years. But I like this fund because it gives me exposure to the energy sector, and it pays a monthly dividend. I do not hold any funds that pay beyond monthly. I have 6 funds that either pay me weekly or monthly. This is a fund that pays me monthly. Another reason why I like this fund. So this fund is paying approximately 10% annually, with the potential for growth. Now, I am very, very bullish on the energy sector these next 5 to 10 years. One, like it or hate it, I'm convinced that America is going through a period of expansionism. By invading Venezuela, by potentially acquiring Greenland, which I think will happen, and potentially maybe even acquiring Canada, the U.S. is territorially expanding into oil-rich countries. There's a number of reasons why they're doing it. I made a video years ago as to why the United States might invade Venezuela. It turns out that they did. I thought it could have happened in Trump's first term. Turned out it happened in his second term. Okay. So, I believe this is very bullish for the energy sector, and I want exposure to these companies, and I want to get income. Now, 10% does not sound like much to a lot of hardcore income investors who buy similar funds to me. However, 10% is healthy, and I'm also expecting a lot of growth. So I'm trying to have my cake and eat it too with this fund, and I'm trying to get income and capture the growth that I believe I will be receiving from this sector in the next 5 to 10 years. Also, this is also an alternative to the tech sector. Tech has performed fantastically this past decade. Companies like Nvidia, Apple, Microsoft, Google, and I think they will continue to do well. However, if you would like an alternative to this, I think energy sector is a good bet going forward in the coming years. I believe that is part of my strategy, and also as it relates to Bitcoin as my investment strategy. Some of these companies, like ExxonMobil, for example, have already started dabbling in Bitcoin mining. I believe that energy companies are going to become Bitcoin mining companies over time. Um, Now, again, as an alternative to the tech sector, there is another fund that I hold, and it is MAGY. Now, MAGY is an income fund derived from the Magnificent Seven stocks. The Magnificent Seven stocks Apple, Amazon, Facebook, Tesla, Nvidia, Microsoft, and Google. Okay? These are the heavyweights. They do very well, especially companies like Nvidia have done very well in recent months and years. And the reason I like the Magnificent Seven or MAGY as opposed to income funds such as JEPI or SPYI that are the same type of product deriving their income from the entire S&P 500. The Magnificent Seven are mainly the stocks that are driving the entire S&P 500. So you can get some healthy income from stocks that are derived from the S&P 500. I do not hold any. But there are some, if you want that stability and that income and you're willing to invest sufficient capital to get reasonable income from those funds, you might want to look at a product like JEPI or SPYI. However, I believe that these companies, for multiple reasons, being so large, they have a competitive advantage, and also they are like it or hate it, they are very close to the United States government. They are going to comply, for the most part, with what the United States government wants from them. So they are going to essentially have the backing of the United States government. And this, one of the problems with government currency, but nothing you can do about it. I suppose you can buy Bitcoin and wait decades down the road from when we use a different form of money. Anyway, so I like this because you're stripping most of the losers that are not giving you sufficient growth. Because when adjusted for inflation, a lot of these companies, even with 1 or 2% growth that may be paying you a 2 or 3% dividend, aren't actually keeping pace with inflation. Magnificent Seven, your odds are a lot better. That is why I like that fund. Bitcoin exposure, not necessarily. Do I think eventually every company will become a Bitcoin treasury company? That's another video. And lastly, I want to mention the 3 Bitcoin related income funds. 3 Bitcoin income related Bitcoin income ETFs that I like. One of them is BTCI, which is very similar to SPYI, which pays out income based off of the S&P 500, which gives you exposure to the upside, but most of that upside is paid to you in income, and they use options and things like that to pay you greater income. But I like this. I like BTCI. Last I checked, the income annually has been between 25 and 35%. Not bad. Pays out monthly. I like BTCI. Another fund, which I have a lot less exposure to, not a very big position, but actually outperformed BTCI, is a fund called MAXI. This is another way of getting exposure to Bitcoin, not in self-custody, but having access to income to where you don't necessarily have to worry about the volatility. You will continue to receive payments even if you buy with the expectation that things are going to be bullish. Maybe you're wrong. You're still holding a good fund. You can hold it for the long term, still get paid a little bit. So MAXI is the other fund. And the third fund is a fund called BLOX. Now, BLOX pays weekly. BTCI and MAXI, they pay monthly. BLOX gives you potential for growth, but it also pays you weekly. Now, also with BLOX. BLOX. It'll give you exposure to companies like Strategy, if you're into that. It'll also give you Ethereum exposure. Now, that's controversial amongst hardcore Bitcoiners, but it'll give you exposure to Ethereum companies. I believe there are Ethereum ETFs in there as well, Bitcoin ETFs. So it's giving you exposure to the broader crypto market, whereas BTCI and MAXI are strictly focused on Bitcoin. A lot of people see the potential for Ethereum potentially out competing Bitcoin in terms of growth during short periods of time. I do not think Ethereum will flip Bitcoin. I think that is not going to happen, but there's people who do think that. Regardless, there are time periods where in the short term Ethereum can outcompete Bitcoin. It's doing its own thing. There's companies like BMNR is a stock ticker, and Starlink Gaming, things like that, that are investing in Ethereum. And I believe you have exposure to a lot of companies like that in this fund. I'd have to look at it again. But if you want Bitcoin exposure, Ethereum exposure, BLOX will pay you weekly. And it's pretty healthy. It's been above 20% for a while. 20% annual dividend paid out weekly. So Bitcoin is the core of my investment strategy. There's many things that you can do. Ultimately, Bitcoin only is going to do what it does if there are entities taking self-custody of their Bitcoin. So self-custody really is the best way to secure Bitcoin. People have different time horizons. People have different investment strategies. So yeah, there's going to be paper Bitcoin. And I believe a lot of people converting their Bitcoin into ETFs and things like that are why Bitcoin didn't go parabolic when everyone was expecting it to go parabolic in 2025, which was still a healthy year for Bitcoin. I believe that this will be a bullish year for Bitcoin still. Maybe not parabolic. I do expect to see a new all-time high this year, but our new all-time highs may be modest going forward. Maybe we do go parabolic, but I do believe that we will see individuals sell a portion of their Bitcoin for these ETFs. I do not recommend that. I'm not saying it's a good idea or a bad idea, but perhaps we will see a more modest, steady growth for a period of time, and Bitcoin-related ETFs, along with other ETFs, to say potentially hedge yourself against volatile times in Bitcoin, such as MAGY. I believe these are good ways of positioning yourself based on what your time horizon may be. Again, sounds like I'm giving advice. It's not financial advice. This is what I'm doing. And everybody has a unique circumstance that's going to affect how they invest. This is something I found interesting that I thought I would share.